I don't want to make futuristic statements because everything is dependent on how things happen in the system. But we would take quarter on quarter. Our focus, even in the first quarter of this year, continues to be largely on individual loans. It's not that we are not doing non-individual loans. Non-individual loans grew by 8% during the year. Individual loans grew by 17% on an AUM basis. Non-individual loans grew by 8%. But the larger focus has always been on individual loans. That has been historical HDFC's policy from inception virtually, that our focus is largely on individual loans, and within individuals more on the affordable housing segment.
Talking about the affordable housing segment specifically, now there were some concerns raised about the quality of the book and the likelihood of default in very small amount of loans. Are you out of that bracket completely?
We don't do those very small loans. I explained to you during the press conference that we give loans to both lower income group people and EWS, economically weaker section people. In the EWS category, our average loan size is 10.1 lakhs, 10 lakh 10,000. In the LIG segment, lower income group segment, our average loan is 17 lakhs and 50,000 rupees. So it's not 3 lakh, 4 lakh loans which, according to some research reports, were causing some concerns in the market.
Fair enough. Another question about your corporate loan book. Now, you said that has degrown this year by about 5%.
The outstanding loans on 31st, if you look at the incremental growth in the loan book, yes, the loan book has degrown by 5%.
And that is going to continue for a while?
I can't make futuristic statements. I mentioned that to you earlier. It depends on how the market plays out. If the market plays out, the appetite is there, yes, we are happy to push that.
Fair enough. Recently, there has been a statement by the Ministry of Corporate Affairs talking about stress test or an AQR sort of review of NBFC books, because they feel that there's going to be some kind of a stress period coming in for that sector. According to you, you think that will help, or will that end up exacerbating the problems much further?
I mean, to my mind, it's not going to make any difference as far as HDFC is concerned, because as I explained during the conference, we do significantly higher provisioning than what is required by regulation. Just to put numbers in perspective, our total provision we carry today is 5,880 crores. Against, if you go strictly by what the regulations today prescribe, it would be 3,220 crores.
Fair enough, but considering you are one of the largest NBFCs out there in the market, so just to get a sense of what it means for the sector as such.
I mean, you have to look at each NBFC's book or each housing finance company's book and then be able to make a statement. I think really stressed loans, I mean, there are different definitions of what is stressed. Really stressed loans, I think, to my mind, most of the housing finance companies or NBFCs would really recognize that. Now, technically, you can always have some argument that, that this is stressed and this is not stressed and stuff like that. But generally, people would be accounting for whatever they have.
So this talk of a crisis within the sector, that is unlikely, would you say?
Well, I'm not talking about what is likely or what is unlikely. I don't think there is a stress on asset quality as far as the NBFCs are concerned, but I don't deal with the NBFCs, you do. Sure. So you would know that better. Sure. But my suggestion would, I think the stress, if any, would be more on the liquidity side, because NBFCs are not able to my mind, get money with the same ease as they were getting in the past. And therefore, we've seen that in the last couple of quarters, a lot of NBFCs have been selling their assets to pay off their loans. Sure. But I think the bulk of the problem, even on the liquidity side, is over. I don't see liquidity also to be a big cause for concern.
Fair enough. You said that you had slowed down in FY18 the sale of loans to HDFC Bank, but this year you picked it up. Could you kindly explain the reason behind that, sir?
So the reason behind that is that, first of all, we have a mortgage sharing arrangement with the bank. The bank sources loans for us. We do the credit, legal, technical checks. We disperse the loan, and then we have an agreement with the bank that they can buy back up to 70% of these loans. Now, there was a view that was there last year, prevalent. There was no constructive view, but there was a view that some of the tax consultants had said that when you sell a loan, the sale of loan would could attract GST. Right. Now, when you're selling a loan, you're not selling just the profit margin, you're selling the entire gross loan amount. Right. So if you impose GST on the entire gross amount, the whole process of securitization just dies down, comes to a standstill. But because there was no clarity on this, we decided as a matter of prudence that till clarity comes in, we will not sell any loans and the bank will not buy any loans. So there was a big backlog of loans that usually in a year we sell about 16,000 crore worth of loans, usually 16,000 crores of loans. Last year we sold only 4,800 crore worth of loans, which was all done in the first quarter. 70, as you know, GST became applicable from July 2017. So till clarity came on GST, which actually came only in, I think, the quarter ended June 2018. Only after the clarity came did we start selling loans again, and therefore the backlog which was created in the previous year got sold during this year. So the total gross sale of loans this year has been 25,150 crores compared to 4,853 crores in the previous year.
Lastly, on the overall asset quality position of HDFC at this point in time, you've seen a quarterly decrease in the gross NPA ratio.
I would not go so much by a 3-4 basis points change in the ratio. But this number can go up 3-4 basis points, can come down 3-4 basis points. It's something we need to be watchful of. We always provide much more than what is required by regulation, just to be doubly sure that theoretically if the NPL number in any quarter in future were to rise, we carry enough provision to ensure that there is no hit in the P&L account.